You walk into the leasing office holding your pay stubs, 2 years at the same job, money in the bank, a clean rental history. The agent smiles, takes your driver's license, and types your social security number into her computer. Then her face changes. She turns the monitor away from you. She clears her throat, and she says the sentence that quietly defines life in modern America. I'm sorry, we're going to need a cosigner, or a double deposit. Your score just isn't where it needs to be. You drive away from that apartment understanding something nobody taught you in school. You are not your job title. You are not your salary. You are not your character. You are a 3-digit number. And that number decides where you sleep, what you drive, what you pay for electricity, and how much of your life belongs to a bank instead of you. This is the invisible grade nobody graded you for. And today, we walk through every level of it. Here is how the machine actually works. There are 3 private companies in America that quietly track almost every financial move you have ever made. Experian, Equifax, TransUnion, the big 3. Every credit card, every car loan, every late payment, every collection notice, it gets reported to these bureaus, and they sell that information to lenders. A separate company, the Fair Isaac Corporation, takes that data and runs it through an algorithm. The output is your FICO score. It runs from 300 at the bottom to 850 at the top. 300 to 850. 5 tiers. 5 completely different versions of America, depending on where you land. Welcome to the bottom, the subprime zone, 300 to 579. Most people think life is just more expensive down here. It isn't. Life down here is locked. You are not paying more for the American economy. You are paying a tax for being allowed inside it at all. You want to turn on the electricity in a new apartment? The utility company runs your credit and demands a $400 deposit before they flip the switch. You want a cell phone plan? Same story. Prepaid only or a deposit on file. You want a basic credit card? The bank declines you. So you walk into a secured card, you hand them $200 of your own money, and they let you borrow against your own cash. That is your starter credit line. Then you need a car. You walk onto a regular dealer lot, and the finance manager runs your file and shakes his head. So you end up at a buy here, pay here lot on the side of the highway. They don't care about your score. They will sell you a 15-year-old sedan for $9,000 at an interest rate north of 20%. According to Experian, the average new car APR for deep subprime borrowers in 2025 was around 15.8%. On a used car, it climbed past 21%. That is what poverty actually costs. It is not just being broke. It is being charged a premium for being broke. Now you climb 580 to 669, the fair zone. This is the expensive middle. The doors don't slam in your face anymore, but the hinges are rusted. You can get approved. You will pay through the nose for the privilege. Picture 2 neighbors buying the exact same Toyota. Same price, same down payment. Neighbor A has a 590 FICO. He gets quoted around 14% APR. Neighbor B has a 760. He gets quoted around 5%. Same car, same driveway. One pays nearly 3 times the interest of the other for the right to drive it. And housing is where the fair zone really hurts. To qualify for a conventional mortgage, most lenders want a 620 score minimum. So you pivot to an FHA loan, which can technically approve you with a 580 score and 3.5% down. But the rates are higher, the mortgage insurance is permanent on most FHA loans, and your private mortgage insurance premium runs around 0.96% of your loan balance every single year until you refinance out of it. You are not poor anymore, but every transaction you make is taxed by the system as if you might still be. 670 to 739, the good zone. Welcome to average America. This is where most adults live. The credit card applications start saying approved instead of denied. Your auto loan APR drops into the high 6% range, in line with the national average for new cars. You qualify for a conventional mortgage. Landlords stop asking for double deposits. Life feels normal. But here is the trap of the good zone. You are not getting the rates on TV. Those 0% financing offers from the car commercial, those are for Tier 1 buyers, usually 720 and above. The best mortgage rate the bank advertises in the window, that is a teaser rate, reserved for the next tier up. You are approved. You are functional. You are paying middle-class prices for middle-class money. You are also leaving tens of thousands of dollars on the table over your lifetime, and you don't even know it, because the menu you are looking at is not the same menu the rich are looking at. 740 to 799, the very good zone, the preferred tier. Now something interesting happens. The dynamic flips. Below this line, you ask the bank for money, and the bank decides whether to give it to you. Above this line, the banks compete for your business. At 740 plus, you can walk into 3 different lenders, hand them your file, and force them to bid against each other. You pull pricing from a credit union, a national bank, and an online lender, and you watch the rates compress in your favor. Your private mortgage insurance premium drops from nearly 1% down to around 0.38%. On a $400,000 home, that PMI savings alone is thousands of dollars a year, every year. Auto dealers actually offer you those promotional rates now. Credit cards send you sign-up bonuses worth $800, $1,000, $1,500 in travel rewards. The system stops squeezing you and starts courting you. This is the level most financial advisors quietly tell their clients to aim for. Not 850, just 740. Because past this line, the curve flattens and the cost of climbing higher rarely pays off. 800 to 850, the exceptional zone, the perfect grade. And here we hit the great irony of the entire system. At this level, you almost never need to borrow money in the first place. People with 800 plus FICOs tend to have paid-off cars, equity-rich homes, and emergency funds large enough to absorb almost any shock. So what happens? Banks beg them to take it anyway. 0% introductory APR offers on credit cards. 0% dealer financing on a new vehicle. The system reserves its cheapest, most generous money for the people who need it the least. That is not a glitch in capitalism. That is capitalism working exactly as designed. Risk gets priced. Low risk gets rewarded. And the reward for being low risk is more access to money than you will ever realistically use. Now, let's do the math that nobody on TikTok wants to do for you. Let's look at one single financial decision, buying a home, and see what your credit score actually costs you over 30 years. Take a $400,000 mortgage, 30-year fixed. A borrower with a 760 FICO in 2025 locks in a rate around 6.4%, their monthly principal and interest payment lands near $2,503. Total interest paid over the life of the loan? Approximately $501,000. Now run it again with a 620 FICO. Same loan, same house. The rate jumps to roughly 7.9%. Monthly payment climbs to about $2,907. Total interest paid? Approximately $646,000. Same exact house, same exact 30 years. The lower score buyer pays about $145,000 more in interest. That is a college fund. That is a retirement account. That is a paid-off second home. Gone, wired straight to a bank, paid as a tax on a 3-digit number. So, how do you climb? FICO has been transparent about this for decades. The score is built on 5 factors, but 3 of them do almost all the work. Rule 1. Payment history. 35% of your score. Pay every bill on time. Automate it. This is non-negotiable. Rule 2. Credit utilization. 30%. Keep it under 30%. Under 10% is even better. A maxed-out card is a flashing red light to every lender in America. Rule 3. Time. The third pillar is the average age of your accounts. There is no hack for this one. No influencer secret. Old accounts, kept open and used responsibly, build the score. You cannot microwave a credit profile. So check your score this week. Check it on all 3 bureaus, and then start climbing. Because in America, the difference between 300 and 800 isn't a number. It's a life. If you learned something, Like this video and hit subscribe. I'll see you in the next one.